Good morning, everybody. It's Jeff Fitzpatrick. It's Monday. This time it's the 13th of January 2025, and time for my weekly video log. Let's see what's going on. So I'll continue with the format from last week. We'll have a look first at the market and then at my stock picks, and then we'll see what's happening around the clubs. So let's get going with the markets. An interesting week. Last week, I said at the beginning of the week we'd be going up, and we were. That was the time to sell calls, and then the market began to fall, and again, as expected, and that's then wading. I also took advantage of the beginning of the week, the increases, to actually roll a couple of puts forward. So let's see what the market's looking like now after that week. And here it is. So can see that during the week we had that up and then it came down, and we're not sure yet whether it has stopped falling or not. However, I think that the 6,000 point on the S&P 500 will be a bit of a psychological barrier. I think we'll get back over it, and once we can get a good enough platform, that will form a base for going forward. So we're looking forward to a really good year. As for this week is expiration week for January 2025. We've got quite a few puts which are expiring this week and also some calls. And I can see that the market might fall a little bit more. The lines you can see in trend lines, I've just put those on. They're not nothing magic about them whatsoever. The market could easily go a bit further down. So it's a watching brief. I'll be rolling stuff forward when I can, if I need to, and then looking to take advantage because we have buying power of some new puts. So that's where we're at with the overall market. And this week's picks. So just to remind you, I'm looking primarily at charts and indicators. If the charts and indicators don't look right, that's the end of my consideration. For the stocks to get through that, then I look at better investing. I'm going to go into that a bit more detail today. Zacks ratings, value line comments, and also their ratings, put premium availability, stock buying power usage, and the annualized return on investment. My preference is for puts that expire at the end or the beginning of months, because as we're seeing this week, we tend to get a drop in prices in the middle of the month when we've got the normal expiration. So try and avoid it. At the moment, there are not too many opportunities to do that, but where I can, I will. And I also want to try and get as much clearance as possible. What I mean by that is I want the strike prices I use to be as far below the current price as I can get. There are exceptions. There are times when I'll go at the money, and there are also times when I'll go what's called for a put in the money. That is when the current price is a little bit higher than the strike price. So here's my worksheet for looking at finding my picks for this week. So anything that isn't shaded means that it has failed the first test. It didn't get through the looking at the charts and indicators. Thereafter, if it's got grey shading, it was thrown out as a result of the value line analysis. If it was thrown out because of the sort of pinky flesh-colored shading, then that's because I didn't like the look of it on the better investing charts. And if it was in blue, then I've thrown it out because I didn't like the Zacks rating. So I'm left then with greens, and you'll notice I've now put in two shades of green. It's almost like Ireland. So I've got the standard green and the deeper green. The deeper greens are particularly good. I particularly like them. They're very good ratings across the board. So after all of that work, which I now do several times a week, I ended up with this list, and there's about 12, 13, I think, there. The next thing I do with them is check to see what premiums are available. And here we are. So I've moved them onto a dashboard now. And what I've got is the current price, which of course is the closing price now for Friday gone. And then I've looked at the expiration dates. Unfortunately, all of the dates available with strike prices that I like are for the normal expiration date in February. So there were no month end or month beginning ones available in the short term. I've then looked at the strike prices available and the premiums, and I've worked out the percentage, how much that is per day, so I can compare them that way. It's a really good way to compare them. Number of days to expiry, the stock buying power estimated usage, and then the return on investment, and then the annualized, the all important, to me at least, annualized return on investment, and how much headroom there is. So you can see this, $4, $8, $4. A couple of them are a dollar or a bit more than a dollar or less than a dollar ahead of the strike price. So I ranked these from the highest to lowest on average return, sorry, annualized return on investment. Some of these selections didn't have a decent premium, but they scored very highly, and I'm looking at other things with them. So one alternative is to buy. So I've got four candidates for potentially buying here. I've since had a further look at NICE, and that one I might be prepared to go further out in time on, because if we can go forward a few months, there are some really good premiums. So that's what I'll be looking at doing with them. So next, I want to show you some of the analysis you're probably not familiar with, and this is one from Better Investing. So I put Better Investing into the core SSG, as they call it, but this is basically the analysis used in the Better Investing organization. Better Investing is sort of the equivalent of TICN in the States, but it's a lot larger. I think there's something like 30,000 individual members and 3,500 investment clubs are in it. This is very useful. This is the first thing I'm basically looking at. The green line is sales, and you've got annual. The green dots are the annual sales being recorded. The white dots towards the end up here, that's because there isn't a full year available. So we're looking there at the quarterly sales. So we can see what the trend is. And on this is American Eagle Outfitters, AEO, and sales are a little bit flat at the moment, and they probably shouldn't be, as we have just been through the Christmas period. The blue line at the bottom is for earnings per share, and we've got a bit of a dip in that going on. Not so good. The black lines in the middle show the annual high and low of the stock price. And we can see at the very end there, with the little red cross piece, that the current price is very low to the annual, so it's very close to the annual low. But we get a lot more on this. So, I mean, first of all, we get the sales, then we get the earnings, then we get the thing we just looked at. We're going along the top here, so that's analyzing growth. Then we go to start evaluating the management, and on this, we're looking at growth rates, and this one is in pre-tax profit on sales. Then carrying on, we've got um, return on equity, total debt, and debt as a percentage of capital. So, that's also interesting. Quite reasonably low, 40% is fine, really. And if we carry on, we get more information. And I'm heading towards, at the end here, we will see this sort of thing. So we've got the buy and sell zones, and AEO is right at the bottom. Now remember, this is based on the forecast that I put in for future sales and earnings, and also future high and low stock price. And I didn't take a great deal of time over that, because this is just to illustrate how it works anyway. And then finally, we end up with this, the buy and sell zones. And again, using the figures I put in, this is an illustration of a stock that would have a very good buy potential. So that's how I use the Better Investing tools. I suspect we are in for a very good year. We're starting the year on some bits of low with borrowing costs being high. And we had at the end of December this carry on in the States where they uh, may need to stop governing and stop paying people, which is always a bit crazy. But we're now getting through that. We're very close to Trump taking office, and I think we'll be seeing some very good action over the year. So, in advance of that, really, or to get that going, I've had a lot of discussions and talks with Owen and Anna to change the style of training that we're going to do. So in March, we're running a conference in Dublin, and it's going to be looking at how we try to get towards 10% profit per month. And you can follow this too. We're looking at a revision of the TICN 4x4 scoring system, revised dashboards, automatic screening to get the TICN stocks instead of doing the mind maps, additional screening tools like the one I've just shown you, Better Investing, and also Zacks. Then I'll have some special guests coming in by Zoom from the USA to talk about Value Line and probably Zacks and perhaps Better Investing. We'll have some live trading and trade management going on, and we'll be looking at the trading record templates. So there's a huge amount, a lot of new stuff. However, if you're new to trading or if you've been a member of a club for a while, but you're not certain yet about actually doing any trading yourself, this is the place to be. There is a full program for people new to trading and who need to revisit earlier training also. But that's all running in parallel to the new stuff. Now, something else on this. First of all, this conference represents excellent value. Previously, we have charged £2,000 plus for a weekend of training. If you book before the end of January, it's £1,200. And also, you can now pay through your trading account, through your membership of a club. Given that there's a very, very favorable exchange rate at the moment, bringing dollars back to pounds, then there is a very good additional saving to be had on that. So if you want to come and join us and you want to pay in that particular method, that's great. Just let me know. We'll sort that out. If you just want to come along and join us through the normal booking system, you can actually come for just the Friday, 21st of March, or Friday, Saturday, or Friday, Sunday. We finish on Sunday, the 23rd, or for the whole weekend. Go to myinvestmentclub.co.uk, and there's a button on the front page there. Click that. You can not only get the booking form, but you can download the full conference program. So I hope to see as many of you there as possible. Thank you very much for that. The Facebook group, uh, I'm still posting there. We're still getting stuff. I'm not getting that many new members. If you haven't already joined, get into Facebook, the Extraordinary Stock Trading System, and join the group. If you're just seeing this for the first time, you perhaps come across it on YouTube, then you can join us, our investment clubs. Have a look at myinvestmentclub.co.uk. You don't have to put a fortune in. You could put £100 a month in. On the other hand, there are members who put 100,000 in and well north of that too. You all get the same return in percentage terms. So if you're looking for a club to join, check us out. And if you want, get in touch with me and we can have a one-to-one Zoom. I can take you through how things work. You can also find out how things work from my best-selling Amazon book, The Extraordinary Investment Club, which is always on offer, it seems to me. So you can get hold of that very cheaply. It's available on about 50 different platforms, and it's available as an ebook, an audiobook, or a paperback. So that's about it for this week. Thanks for joining me. Great to see you. Thankfully, the weather's picking up a bit, and off we go into 2025.